This is the Decentralized Insurance Panel qualifying risk for the Immutable. Michael's going to be popping in here in just 1 second. I'm going to go ahead and leave and let him take my spot and go ahead and get the conversation started.
Good evening. So today we're going to speak about a really exciting topic, insurance. Hopefully the fact that we're talking about decentralized insurance is going to make it a little bit more exciting. I would like to hand it over to our panelists to introduce, so that they have a chance to introduce themselves and the projects, and then we'll get into the discussion. Why don't we start with Yann?
Yeah, thank you, Mike. So my name is Yann. I'm CEO and co-founder of Flyon. So our model is a parametric insurance with the three main value proposition: claim automation, predictive analytics, and risk management. And our first vertical of application implementation is flight delay and cancellation. And we're also working on other COVID compliance coverage as we speak. And I've been in the US for 17 years with an experience in Wall Street, fintech, and more recently in digital assets.
Thank you, Yann. Let's go to Christoph.
Hello and good evening. Thank you, Michael. I'm Christoph Mussenbrock from Etherisc, and we are in the space since DEFCON 2, 2016. At that time, we were the first to have an app with flight delay insurance. It was one of the first real-world applications on Ethereum. And since then, we have further developed the product, but also we have seen that this is an opportunity not only for one product, but for a whole class of products. And we have built a whole platform. Everybody can build their own insurance products. And so actually something like an operating system for insurance, a Linux for insurance on blockchain. And we have made one additional pilot with crop insurance in Sri Lanka, which was quite successful with support from Oxfam and Aon, our insurance partner. And currently we are working, we have spent a long time on the legal side of things, and now we have approval from the German regulators, so we can start with flight delay and other products, and of course crop insurance in the next months. And yes, I'm happy to speak here. And the next one.
Thank you, Christoph. Your turn.
Yeah, hi, I'm Zubin, CEO and co-founder of Opyn. We are building options, decentralized options on Ethereum. We originally started off with the main use case of like the protocol, the convexity protocol that we built out being insurance, but we've since moved towards options, which in many ways are used as insurance in traditional finance, both in terms of portfolio insurance, which is one type of options position, and as well as like insurance on individual risks that you might have on a portfolio. So options are a gigantic market. People that may be less familiar may not realize that more than $300 trillion a year of volume happens on exchanges for options alone. And that doesn't even count OTC options, which is a bigger market than even exchange options. And so I think this is like a really exciting time because we're building something that's so powerful and so widespread in traditional finance. And we're just doing it in a trustless way, in a very easily accessible way on chain, with no barriers and much more transparency. And I'm so excited to be part of that.
Thank you, Zubin. And now, finally, it's Hugh's turn.
Yeah, hi everyone. I'm Hugh Karp. I'm the founder of Nexus Mutual. Nexus is essentially it's attempting to be a decentralized version of Lloyd's of London. That's our kind of grand vision, but definitely starting within crypto, covering smart contract failure to begin with, and then looking to cover other risks in the crypto space before potentially moving outside crypto. That's kind of the grand vision. Build a general platform that can cover a whole bunch of different stuff. But yeah, essentially we're a kind of DAO that runs on chain and has a voting process for claims, and that's probably one of the more differentiating factors that that we've got versus the other protocols. So a bit more governance heavy, but yeah, gives us some flexibility. So yeah, that's us in a quick nutshell.
Thank you, Hugh. I think as motivation discussion, it would be good to start with the case of YAM. YAM Finance for a while was the hottest project in DeFi. The only problem that this while was rather short. It just lasted for one day. I would like to ask Hugh to kind of, because obviously not everyone probably is familiar with this case. Maybe you could introduce this case a little bit more. I think it would be a good motivation for the importance of insurance in this decentralized space.
Yeah, so I have to say I'm not an absolute expert on YAM as the detail as such exactly what happened, but essentially a new protocol with rebasing formulas like Ampleforth has and stuff like that, with some funky governance and yield farming opportunities and things, and it all went a bit nuts, which was I guess great to see the space getting a bit of attention, but. From our perspective, perhaps how it interacted with Nexus over the few days that it was up so it got released, then we woke up and added it to the Nexus UI so people could start staking on it, and then cover could become available. One brave person, I think, staked on it, and so that meant a small amount of cover was available at about a 90% APY cost. No one bought cover. And then YAM got hacked, or the bug disclosure was made. And so I guess that was a pretty short story overall with insurance. But to me, it was quite interesting because we had something really new, something very high risk. And we had a whole bunch of our members decide not to stake on it because they weren't sure about it and didn't want to take that risk. So from my perspective and from Nexus's perspective, I think it worked quite well. But hopefully it also highlights that the space is quite, there's quite a lot of risk out there. And even if you're taking parts that have been used before, like compounds governance, synthetics minter contract, and putting it together, it still may not quite work as you think it does. And audits and stuff have value.
Thank you. Besides YAM, as far as I know, with YAM, there was a case of, coding errors. Apparently, there just was one line that was messed up, and then this line interacted with a lot of other lines in the code. But besides some kind of coding error, why do we need insurance in the DeFi space? Is it, or maybe do we need insurance? Maybe we don't need insurance. What potential dangers do we have that need to be covered? Who wants to start?
Yeah, I think we have one metric in every economy. In nearly every economy, you can measure the development status of this economy in the percentage of insurance, which is part of the gross economic product. And so in developed countries, you have something about 6%. And if you look at DeFi space, then actually we are nearly zero. So actually the DeFi space is still underdeveloped. And insurance is playing always a large role to stabilize the economy and to enable people to invest, to perform business. And so I think even if we are working with smart contracts, which are said to be unbreakable, everybody knows that that is the theory, and the practice is that everything breaks always. And so we need insurance. So for me, it's absolutely necessary that we develop insurance products in this space. Otherwise, we won't get the adoption we need to make it a real world case.
Yeah, if I can add to it, if you don't mind. No, I totally agree. From the macro, top-down view from Christoph, very valuable. I think from a bottom-up, if you think about the more obvious case of DeFi and cross-border payments and remittances, for Bitcoin, repos and whatnot, you want to think about those FX contracts, cross-currency swaps, and currency contract. having some counterparty risk components that can be mitigated by credit insurance contract. I think there's a real need, at least on the portfolio level, that certain institutions regionally, abroad in emerging markets, gets this safety net as a way to protect themselves. And then insurance is actually well designed for it.
Absolutely.
Another, I think, interesting question: are there any difference between decentralized insurance and traditional insurance? Besides the fact that we're talking about insuring DeFi products, blockchain-based product, but is there any other difference in approach, in the way you calculate the risk, in the way you price insurance? Why don't we go to Zubin? I understand your company has a slightly different model. It's more about options, but still, I think it's something very close.
Yeah, so it's a great question. I think one thing that exists in DeFi and crypto in general is AMMs, which are one of the most interesting price discovery models ever, right? Something like Uniswap or Balancer, Curve, etc., that allows people to bootstrap very quickly, and then assume that the taker market or the other side of the market is going to find like an efficient price for an asset, right? And so what we do for Opyn is we bootstrap a price that we think our options should trade at. For example, we launched some of the first ever trading Curve options, PRV options, last night on Opyn, and we had some estimate for volatility, but the market had very different estimates. And so it seemed like people thought we underpriced volatility, and so people came and bought a lot of options. So what do I mean by this, right? It's that we can, in traditional insurance, often it's one party that is pricing risk. But in more derivative/finance, it's a market that prices risk. And with AMMs, that just supercharges the ability of the community to price risk, to price insurance or an option position or price volatility or all these like very interesting, weird, abstract positions that I think are really interesting and will provide a lot of safety or kind of hedging strategies for DeFi users. And so I think the AMM is sort of a game changer when it comes to pricing.
Yeah, to add to that one, I think the one thing that it actually allows you is kind of using that prediction market type philosophy that you can put your money where your mouth is and get a price out, right, basically. And so we're bringing markets to insurance pricing. And so traditional insurance often just looks at past data and past history and builds a complicated model, and the actuaries have a whole lot of fun, and then they give you some numbers, and which works quite well. I used to do it a lot, but the thing is that here, especially in DeFi, we basically don't have any history, and so the thing is to actually cover this stuff, you need to take a different approach on the pricing, and if we actually can develop pricing approaches that use AMM techniques or prediction market techniques to get the market to solve the answer, then we can enter new markets really, really quickly versus the traditional insurance industry. And to me, that's a complete game changer, because you can start pricing community-based covers, small niche areas where the regular insurers just aren't going to bother because it's too cost prohibitive to get down to it. And so we can actually start doing things and helping out people that we couldn't help out before. So yeah, I think that's pretty fascinating.
Right.
And sorry.
Sure.
Yeah. So I'll go for 30 seconds, but I wanted to add one thing, because you guys touch upon more esoteric, specialty insurance, less vanilla. I think for the more vanilla insurance, I think there's also a benefit of decentralization, because we shouldn't forget that insurance is a supply chain, right? And they work in silos. And each time you have to break barriers between the broker, the carrier, the MGA, the reinsurance, or the claim adjuster, you're going to be suffering some admin cost and some bid offer, right? Having a decentralized model and very fluid model, that the way Opyn is describing, then you're actually compressing all those costs and actually creating a much more efficient market.
Yes. Zubin, you wanted to... Oh, Christoph? Okay.
Yeah, I would like to add one last point. I think a major difference between traditional insurance and blockchain insurance is that we can actually also replace the legal framework, which is the base of insurance in the traditional world, because we can replace the legal guarantees by technical guarantees. Yeah, people don't need to sue an insurance company because they have a smart contract which acts deterministically and where they can see beforehand that they will get their payout if certain conditions are met. So this is a complete different game changer, and it brings a lot of transparency in a completely intransparent instant industry. And I think that is something what we need to explore more.
Let me then ask, let me start with Zubin. With decentralized insurance, or in your case, maybe options, do users get a better deal than with traditional insurance? Do you guys take a smaller cut than traditional insurance companies? Because obviously, if you're talking about big insurance companies, they're usually giant corporations. They employ tens of thousands of people wearing gray suits. They buy TV commercials, etc. The executives have to make millions of dollars. So what about you? Do you give us a better deal?
Absolutely.
Well, this is a great question. I think in the long run, we want to take no cut, right? Opyn is not really like a company that's trying to build a product that will monetize revenue from. It's more that maybe there's a DAO that takes transaction fees from the system. And then since these O tokens are freely trading, maybe there's some transaction fees associated with the trading venue itself. Like Uniswap has like 0.3% fees on every trade. And so I think kind of what Christoph talked about, the legal structure, that adds administrative costs. And Yann talked about this very complicated supply chain. In each part of the chain, there's like this new admin fee and bid offer spread, et cetera. And there's very few parties that can actually supply either these insurance or derivative contracts. Whereas in crypto, when it becomes permissionless, there's like all those parties are kind of eliminated. A lot of the counterparty risk is also eliminated. And in addition, I think like it's, a lot of these legal costs and institutional costs also goes down. And so I think it will be a lot better for consumers in the long run. Also because they'll be able to access instruments that they couldn't anywhere else, right? And so that'll be a very interesting thing to see.
And you can also...
Yeah, you can also, the other really big benefit here is it's actually can be community driven. So like anything that the DAO or whatever extracts it for the benefit of the people using the platform, which is, the whole crypto decentralization thing. But like that's fundamentally different to extracting it for a shareholder base. And so you can actually pass those benefits back to members. So to the extent that there is a profit margin, it goes back to the users. And that's kind of the fundamentals of a mutual, I guess. But it's also fundamental for like how crypto networks work in more generally. I think that's you cut massive costs out, plus you give whatever's left over back to the community. So I mean that's a fundamentally different model, and it works for the benefit of the people using it.
I was going to add something real quick. So with Flyon, we decided to build on Ethereum. While we, eventually going to be blockchain agnostic, but we were thinking about an STO and ICOs opening our digital asset for public trading, and with the the red tape, it became like very complicated. So having like closed up blockchain model is kind of counterintuitive. But we know we're going to keep that model because we want to open it up eventually. And the one thing that's that's kind of not easy to grasp. But with the new generations, Gen Z and millennials having much more crypto wallets, right? I think, insurance is going to be monetizing the crypto values, either by premium, payments or even receiving, claim payout. People are going to be compelled to use cryptos as an insurance, currency value within the system.
Mm-hmm.
I think insurance, in the future, insurance will be built in like something which you don't see anymore. Like in your computer, there are lots of transistors, but you don't see them, yeah? And you won't see insurance in the future. and you won't pay for it because the amounts will be so small, because most of insurance will be on demand. And just as you use something, you are insured for the use of this particular car or bike or whatever, or ski lift or whatever you do, yeah. And always you can be insured just for the moment where you use it, and that will be a complete different way of using insurance because the mechanics are no longer costly. Yeah, you can automate it, and the machinery does not cost anymore. And so I expect that we will see complete new pricing models in insurance in the future, much more on demand.
Thank you, Christoph. Another, I think, interesting topic is that obviously we can say what we want about traditional insurance, that it's expensive, that those are big corporations, but over the past decades and centuries, we've grown accustomed to trust those, at least the big insurance companies. We know most likely they're not going to go bankrupt. They're not going to do an exit scam. They're not going to disappear. You can sue them, etc. Why should someone trust you guys? Because a lot of times when you look at DeFi projects, even if you can find a website, it will not list even who are the founders, who is the team. So why should we trust you? Is there like embedded trust on chain, or who wants to start?
Yeah, I'll give it a crack. Basically, I think we all have to earn everyone's trust, and I think that's what it comes down to. Like, honestly, if a big insurance company came into our space right now and offered comparable products, everyone should probably use them. Because like we're still building new things, we're still tinkering, we're still coming up with the best models that work, we're still writing our own code that can have flaws and all the rest of it. But the big insurers aren't coming yet, and they won't for a while. And we've got some time to develop these things and build them up to be better than the traditional insurers. But it will take some time, and we have to build everyone's trust by paying claims and proving the system works over time. So it shouldn't be taken for granted.
Look at, for example, the Gnosis wallet. Yeah, when we started, we used the Gnosis wallet. And why did we use it? Because there were $1.7 billion in it at that time, yeah, and that was the wallet with the highest amount of money in it. So we trusted the wallet and the code because there was people using it and it worked. So I think that is what will be the fundament of trust in the future. People using our stuff and it's working, and then they will trust it. That's the only way to do it, and this is only by doing it and by time.
But let me ask Yann, can you create some on-chain tools to build trust? Can you provide a public audit of your treasury of your insurance pool? Is that something that you could do on-chain to so the users could potentially check you out and say, okay, these people are trustworthy. I can audit their wallet, or I can audit their treasury life, and see everything is in place, they're not leaving, etc.
I mean, I could take that one. So, we all, dealing with the claim automation in one way or another in this panel. This is at the core of my product. The claim process and the transparency, that's been brought in, and very much like a 180 degrees version of what the traditional insurance is doing, is actually something that we can plug in as a dApp, right? As you said, can we plug in on chain just with a Web3 app, and giving evidences that steps are being followed, and every step of the way is actually very lean, very fast, and there's no subjective way of deciding certain claim would be rejected or not. So that's very much like the core of what we think decentralized insurance can bring as a supply chain of a value add. This is my impression on it.
Thank you. So next up, I don't think we have a lot of time, but maybe briefly, I want to go to Zubin. You mentioned options. For now, I think the only options that are available are crypto options, so options on crypto products. But as you said, in traditional finance, The option market, it's huge. It's trillions of dollars. Do you think in the future, and I don't mean distant future, 10 years from now, but over the next couple of years, do you think we'll see options on chain for traditional assets?
I hope so. I mean, that is kind of a proof that DeFi is here to stay, and to a certain extent, supplanting traditional ways of sharing risk and buying insurance and dealing in derivatives. One thing, just like kind of on what you said earlier, is that I think in the traditional financial industry, to a certain extent, we place trust in institutions that have failed and were backstopped by the government, right? And if you look at the 2007 crisis, you can find insurers and many, many bad kind of trades and positions they took, right? And so the question is, I think a big difference with what we're doing now is transparency, right? And for everyone here who has some project on chain, you can look at every single line of code. You can see how the insurance funds are handled, what positions are on the books. And I think that's like really powerful.
Thank you. Thank you. I think we are out of time, but thank you very much. Thank you, Zubin, Yann, Christoph. Hopefully no one fell asleep while we were just talking about insurance. Thank you very much.
All right, thanks a lot.